Hey everybody, today is Wednesday, the 29th of November, and the market gapped up significantly here today and then sold off for most of the session. You can see we were below the volume weighted average price for the day, almost the entire session. And as we broke this level of resistance and failed from an extended level, it does open the possibility of the potential, as we mentioned in the midday video, from a failed move could come a faster move lower. So if we see something along the lines of this and we break this level, this is the level we've had our eye on all week, 453.5. You can see that tomorrow, as of midday, we'll get rid of this data because we had 1 week ago, we had a half a day of trading. So that's at 1 p.m. tomorrow Eastern time. So that 5-day moving average will not only just flatten out, but if we're below that level, then below this level over here, then we'll be trapped below it. That would turn the light more cautious than currently. It is still buyers in control. We've been cautious up here because the market is extended, but there's been no reason to be short yet. Just be aware that if we break below that 453.5, it's possible we could be headed for a little bit of a flush. I don't think it would do any damage to the major trend, but perhaps a move down towards that 450 level, the anchored volume weighted average price from the middle of this month's pullback. That's right here on the daily time frame. So I don't expect anything really damaging to occur if we see some selling. But for the NASDAQ, you can see the key level in here for the near term is the low of this week. Perhaps we do something like this, bounce up, get trapped below the 5-day moving average and head down towards here. There's no evidence that the sellers are getting aggressive. We just have 1 day so far that the gap was sold into. That doesn't make a trend reversal. You can't look at just one candle and call it some pattern and then proclaim a top. We thought that this might end up being an important level, that the anchor off of that high, but now we have a higher high. So we still have that pattern of higher highs and higher lows. Now the 5-day moving average is flattening a little bit, and tomorrow again it will flatten out. The Russell 2000 gapped up and failed and came right back into this range, and that's really not much as a surprise because we came up to the declining 200-day moving average in the year-to-date anchored VWAP, which it can't close above here. Hasn't closed above there since mid-September, and we remain stuck below that. So just nothing going on in the Russell 2000. Yesterday, I said that the semiconductors had turned to basically a red light because we had lower highs and lower lows and below the declining 5-day moving average. I also went on to say it wouldn't surprise me to see this. This is what I had actually sketched in yesterday. In the end of day video, and that was basically what we saw. So the longer term trend is still very bullish. We held above this prior band of resistance over here. This is the all-time high, by the way, and we held on a closing basis above that. So I think that near term we lured some shorts in, and it rightfully got some stops taken out as well. I think that the light kind of went from yellow over here, over here to red for a little bit, back to yellow for now. I'm not quite bullish yet. We'll see how it behaves. It is holding the 5-day moving average, so now if we can start to see higher highs and higher lows, then maybe we're going to continue to move higher. I still just want to express a little bit of caution in those semiconductors as they digest this large move they've had over the last month or so. Biotech stocks tried to rally, and they came right up into this zone that we've been talking about, which was this prior support. Had the potential to turn into resistance, and we closed below the daily volume weighted average price, but we are above a key level of near-term support, and we are above the rising 5-day moving average. I still view these biotechs as a waste of time, so I really don't see much point in talking about them. The financial stocks continue to make a pattern of higher highs and higher lows. I don't see any danger until we get below that 35.15, and even if we were to do it tomorrow, I wouldn't get bearish on that. I would rather see it kind of grind down, undercut it slightly, make a lower high, and then perhaps we would be due for a little bit deeper pullback. But right now, I don't see anything really to worry about. Just raise your stops if you're long the financial stocks. Energy names unable to penetrate this band of resistance up in here. Yesterday, we spoke about the higher lows that we had been seeing, and that pattern was broken here today. So these higher lows were indicating maybe the buyers were getting a little bit more aggressive on the pullbacks, but now that it broke below that without getting above this resistance, tells us that the sellers are back in control, and we didn't have really any expectations that the buyers would be able to maneuver much higher from here, not with the declining 50-day moving average and the fact that we're stuck at the 20-day, 200-day moving average and the year-to-date anchored volume weighted average price, that thick blue line right there.